Do you need to transfer shares in your company but don't want to pay solicitors or accountants' fees? Stay tuned to find out how. Hi there, Chloe Zaytunian here from Rapid Formations, the UK's leading company formation agent. Transferring shares from a shareholder in a private limited company is not a simple case of completing and submitting a filing to Companies House. Instead, it is necessary to follow certain defined processes to enable the transfer of shares from one person to another. In this video, we explain our 8-step guide to transferring shares. Please note, we have assumed that your company uses the model articles and that there are no shareholder agreements that need to be accounted for. If you are unsure about the process at any point, you should seek specialist support. So, let's get started with step 1. Identify the person who is to receive the shares. The person who is seeking to transfer their shares out will usually need to find someone to sell their shares to. In other words, they need to find a willing buyer. Step 2 is to agree on a sale price. Once a buyer is identified, the price, also called the consideration for the transfer of shares, will need to be agreed upon. That is, the amount the buyer will pay the seller in exchange for the shares. In general terms, there aren't many rules surrounding how much shares can be sold for. It is primarily for the buyer and seller to come to an agreement. Indeed, it is often possible to sell the shares for free. It is also possible for shares to be transferred for something other than money, for example, in exchange for the provision of certain services. A consideration that is for something other than money is called a non-cash consideration. Once a seller has been identified and the consideration agreed upon, a share purchase agreement may sometimes be entered into. Whether or not a share purchase agreement is appropriate will often depend on the particulars of the transfer. Next up is step 3. Complete and execute a stock transfer form. The stock transfer form is a document which includes the key details concerning the transfer of shares, namely the company's name, the name of the class of shares being transferred, the number of shares being transferred, the name and address of the transferor, that is, the seller, the name and address of the transferee, that is, the buyer, and the consideration paid, if any, for the shares. Once the stock transfer has been completed, it is signed and dated by the transferor. Where there is still a liability attached to the shares, that is, they are unpaid or only partly paid, a slightly different stock transfer form will be used, and the buyer will also need to sign and date the form. If stamp duty does not apply to the transfer of the shares, then the stock transfer form will need to be certified as being exempt from stamp duty on the reverse. Certification is usually carried out by the transferor. The next step is to deliver the signed stock transfer form to the company. The executed stock transfer form should then be delivered to the directors of the company for their consideration. The directors will need to decide whether to approve the proposed transfer or not. This might include ensuring certain procedures are followed. For example, if there are preemption rights in place, the directors would need to arrange for the procedure to be followed or otherwise disapplied. They will also need to ensure that any other restrictions affecting company transfers are either followed or dealt with. Subject to meeting all the requirements, the transfer will usually then be accepted by the directors. Step 5 is to pay stamp duty, if it is applicable. As mentioned earlier, the payment of stamp duty may be required on certain transfers. Generally speaking, if the value of the share transfer is going to exceed £1,000, the incoming shareholder will need to pay stamp duty at a rate of 0.5% of the sale price of the shares to HMRC. If stamp duty does apply, the completed stock transfer form should be sent to HMRC with the necessary payment within 30 days. If HMRC is satisfied that the correct amount of stamp duty has been paid, they will issue a letter providing their confirmation. The next task is to update the register of members and issue the share certificates. Now that the stock transfer forms have been executed and approved by the directors, and stamp duty has either been paid or certified exempt from, the transfer may be entered into the company's register of members. Entry of the transfer into the register of members is an important step, as this is what gives legal effect to the transfer. The transferee becomes the legal holder of those shares when their name is entered in the register, and it should be completed as soon as possible. The seller of the shares should then hand their share certificate to the company for cancelling. The company usually does this by writing "cancelled" on the face of all certificates and copies that are outdated. A share certificate is then issued to the transferee. In general terms, a share certificate includes the following information: basic company information such as name, number, and registered office address, date of the share certificate's issue, certificate number, which is a unique identifying number for the certificate, the shareholder's name and address, number, class, and nominal value of the shares held, and the paid-up status of the shares. The share certificate is executed on behalf of the company, which is usually done either through the signature of 2 directors, 1 director and 1 secretary, or 1 director and 1 witness. To comply with Section 776 of the Companies Act of 2006, the certificate needs to be issued to the shareholder within 2 months. Step 7 is to update the people with significant control, or PSCs. Anytime the shareholding position of a company changes, the company needs to consider whether its register of people with significant control has changed. For example, if the transferee of the transfer now holds more than 25% of the shares issued in the company, the directors will usually need to update their PSC to identify them as being a person of significant control. When a shareholder change does shift the company's PSC position, for example, the new shareholder may now hold more than 25% of the company's issued shares, the director should update the company's PSC register accordingly within 14 days of the change. Companies House, in turn, should be notified within 28 days of the change from the point it became effective. The final step in the process is to file a confirmation statement with Companies House, informing them of the transfer. The confirmation statement will list the date of the transfer, the number of shares now held by the seller after the transfer, and the number of shares held by the buyer. It's not compulsory to do so right after a transfer, but it is considered good practice to ensure the public record is kept up to date. It means that anyone who checks out the public record will see who now holds the shares. So there you have it. That was our 8 steps to transferring shares in a private limited company. We hope you have found this helpful. If you wish to transfer shares, we can assist you with our transfer of shares service for $69.99 plus VAT. This service includes a stock transfer form, board resolution, and share certificates. We can also prepare and file a confirmation statement to update the Companies House register. If you have any questions, please leave them in the comment section and we'll get straight back to you. In the meantime, we have included several useful links in the description below, including a link to our transfer of shares service. Finally, be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations, and more. We're always happy to help and we can't wait to hear from you. Thanks for watching. See you next time.